Hey, somebody can hear me. Okay, good. All right. Hey, welcome back, everybody. Good to be here. Ed Ponsi with you, your FX educator here on behalf of FX Street. I'm just pulling up chart of the British pound here, which is down sharply this morning, or is it? Really, this is kind of what we were expecting. If you were tuned in to us earlier this week, we were saying, hey, there's a very good chance that whatever the UK pulls out, whatever the Bank of England pulls out on Thursday morning, there's a good chance that, at least to an extent, this is already priced in. I mean, what do we call this? When we drop 2,000 pips, I'd say we're pricing something in, and now we're pricing it in again. We have cut rates. The Bank of England has cut rates by 25 basis points. And not only 25 basis points now, but probably another, I'm going to say 20 basis points later. This is all based on, this is not my projection, this is based on comments from the Bank of England Monetary Policy Committee members that they do want to cut rates further, but probably not all the way to zero, which I found interesting. There's a lot of things that are very, very interesting. Right? It's very interesting. Inside this report, for one thing, just remember that before this occurred, before Brexit occurred, it was a doomsday scenario. The world was going to end. Now let's take a look at what they're saying today. The Bank of England says that the UK economy, they've cut their projections. They thought the economy was going to rise 2.3%. Now they think next year the economy rises by 0.8%. Now I want you to think back, before I tell you how this shapes up against prior projections. I want you to think back. What were they saying? What was the Bank of England saying about the economy? And what were UK politicians saying was going to happen to the UK economy before, if they voted to leave the European Union? What did they say was going to happen? I'll give you a hint. It's worse than 0.8% growth. They were projecting a recession. Ron says it would be bad. Yeah, they were saying they would have a recession. Now, certainly 0.8 is nothing to write home about. But it's really not much worse or better than the other countries are doing right now. But remember, these are the same people who told you that the UK was going to go into a recession, which means GDP below zero. Now they're predicting GDP above zero by 0.8%, and they're also saying that that is a conservative projection. So it could very well be higher than that. Interesting, isn't it? Right? Is it not interesting? So that's yeah. So in other words, listen, I'm not going to use the term that we colloquially use to describe things here in the U.S., but it begins with a bull and it ends with it, and you can fill in the blanks. It's nowhere near as bad as they said it was going to be. What they're saying now is way different from what they were saying a month ago. Okay? Now, in addition to that, right, yesterday, Wells Fargo said, we have not seen any significant impact. 3 days ago, Citibank said, we have not seen any significant impact. A week ago, Credit Suisse said, we have not seen any significant impact. SAP, the big software company based in, I believe, Germany, says they see no impact. Google says they see no impact from Brexit. Do you sense a theme? Do you sense a theme? I do. The theme is it's not as bad as they said it was going to be. They got the market all ginned up and all feared up, and the market crashed because of this, because, traders aren't paying any more attention than anyone else. And, you look at this now and you say, it's not as bad as they're saying. And soon I think people are going to figure that out. They'll figure it out soon enough. It might take them a day or two, but they're going to figure it out, maybe by next week, that it's not nearly as bad as they thought it was going to be. All right? It's not nearly as bad as they thought it was going to be. Okay, isn't that strange? And what also is strange is that this chart actually, despite today's candle, this chart still looks pretty bullish to me. This looks like left, head, right. Okay, so I have picked up a little bit of British pound this morning for the long haul. And I'm prepared to buy more if it dips back. If it dips lower, I'm prepared to get more, because I think this is all. No, they're not putting. Once everybody puts the pieces of the puzzle in place, this thing's going higher, in my humble opinion. Now, what else did the Bank of England do? Well, they not only agreed to cut interest rates by 25 basis points, and the projected that rates would go even lower, but not below zero. Carney right now is coming across the newswire as we speak, saying he is not a fan of negative interest rates. Not a fan of negative interest rates. Right? So that's a quote from Carney. I am not a fan of negative interest rates. That came across the wire 23 minutes ago. So stock markets love it, right? But, they already said they were going to do this. Just sifting through here to see if there's anything else worth looking at. Also, they're buying bonds. Oh, forgot to mention. They're buying bonds, about 60 billion U.S. worth of bonds, 10 billion of that in corporate bonds, and they certainly left room to expand that program. Okay? Anyway, so let's go to the 5-minute chart and let's see how that shakes out. So we've had, since Carney's been making these comments, the pound has been coming back. It dropped pretty sharply. Here's the 5-minute. Look at this, man. There's 130. You saw it whoop, shot way up, back down, all the way down to close to 131. Starting to recover now. Don't know how long it's going to take, but I do expect this to recover. And, as soon as people add it all up, they're going to say, wow, they're going to say, listen, this shouldn't be this low. It shouldn't be down this far. Carney also made positive comments about the British pound, saying that the low pound was going to boost exports, which of course is true. I mean, he's talking about also it's going to help people to get mortgages, lower interest rates. So, it just doesn't sound all that negative to me. Okay? All right, so that's where we stand with Carney and the British pound. I have to deal with the trade from the euro from Tuesday, and it did what I thought it was going to do, but my timing was off. This is exactly what I thought was going to happen. The euro pops above 112, it goes to 112.30, and then it drops like a stone. And if you had a sell under 112, which is in this area here, you probably did very well with that. I got twisted up in here. I got short too soon. I got short too soon, and I got stopped out with a small loss. I should have won, but for some reason I didn't follow my plan the way I had it in my mind. My plan was to let it come above 112 and then sell it when it drops below. Well, that actually happens here. So I believe I sold it short in here with a stop above here, and I got stopped out pretty quick, but that was just a poorly played on my part. You have to give trades more room to run, and I should have let it come further above 112. The reasoning behind the move was sound. It was a good move. It was a good trade to place, and it worked very, very well if you were patient and allowed it to come a little bit farther above. Ron says I sold it at 112.10. I hope it worked out for you, man. I really should have let it come farther and then shorted it under 112. It's not my style to say, oh goody, it's 5 pips above 112. Let's get ready to sell. To me, 5 pips either way should mean very little, and should not have been enough to generate action. So my fault on that one. You see the euro's getting a little bit of a bounce here too, as Carney is speaking as well. I think the euro also beaten down in the wake of Brexit pretty badly, and possibly depressed a little bit. The euro depressed a little bit due to Brexit. All right. So maybe the euro gets a bounce off of this too. It sure looks like it. Here's pound dollar again, just creeping back up to 131.75 from 131. We'll see if that continues. Carney's still speaking, I believe. I haven't gotten any word that he's done speaking, let's put it that way. But the comments he's making seem to say that things aren't as bad as they thought it was going to be. All right, so, but if it seemed to you, as it did to me, that all of this hype going into Brexit was way overplayed, it certainly looks that way now. Okay. So enough on the British pound. That's over and done with. Let's move on to the next trade, but I'm definitely long here. Let's see what else is coming up. Of course, tomorrow's the big day. Right? Tomorrow. So today we already had the Bank of England. Tomorrow's the Fed. Well, not the Fed. I shouldn't say that. Fed has nothing to do with non-farm payrolls, by the way. Non-farm payrolls are generated by the BLS, Bureau of Labor Statistics. And here's non-farm, 180K is the estimate, which is, seems pretty weak. Last month was 287, but I just would like to point out that the month before that was 11. So if you average it out, the last two on average have been less than 150. Think about it that way. The last two non-farm payrolls averaged out is less than 150, and now we're saying 180, which is not good. It's not great at all. People want to tell you that 287 is great, but we looked inside the numbers, and like 60,000 of those jobs were like for waiters and people who like leisure and travel. So if you want to be a bartender, if you want to wait tables, if you like to clean rooms after I leave my hotel, if you want to clean the room, there's a job for you out there. Okay, but other than that, it's not a whole lot out there, at least not in the U.S. Ron says, is pound yen in play, or is it good to avoid due to yen strength? That's a tough one, man. I've been staying away from it because the yen is kind of like what we call a binary situation. Just like Great Britain enacted all this stuff today, Japan recently enacted a lot of quantitative easing and stimulus. Here you see the reaction here. We'll go to the daily chart. I will say this. It looks like a buy at 130. It's a pretty low. Nothing's low risk if you don't manage it properly. But if I buy this at 130, and I use good risk management, I think I have a really good chance of making money here. Because I think we're getting close to the point where Bank of Japan does something. I think that point is under 100, and we are getting very close. Right, here's 100, and we are currently, this is against the dollar, we're currently just above 101, but we're hanging around 101 now for a few days. The yen's been getting stronger and stronger. I think if dollar yen goes below 100, there's a chance that it gets pushed up. And if dollar yen gets pushed up by the Bank of England, pound yen will also go up. I'd be a buyer of pound yen at 130. That's the support level. But it's also the point you've got to figure that if pound yen is getting to 130, at that point dollar yen would be under 100. And under 100 is where I believe there's a chance that the Bank of Japan steps in and finally does some intervention. Right? We shall see, right? Nobody knows for sure. But very, very interesting possibility, right? So I do like it. I do like pound yen, quite frankly. Although I like to trade this one. This is one of my favorites to trade. Not so much longer term, but more of a short term trade. And because it moves. I mean, there's good volatility here. In the guppy. I call it the guppy. If you look at this quickly enough, it looks like the word guppy. Right? Or if you're semi-dyslexic, it looks like the word guppy. All right? So anyway, 130 is where I'd be buying on pound yen. And I'm also, you see, I'm kind of torn, I want to buy dollar yen under 100, but maybe I could make it a basket trade. Like take a half position in dollar yen and a half position in pound yen and just make it a basket against the yen. All right, that's kind of how I'm looking at this. Okay. But wow, what a chart. We've come from almost 200 down close to 130. I would definitely be a buyer at 130. Okay. All right, good questions, good questions. All right, we'll keep it moving here. I want to take a look at, we're looking at the calendar for a moment, just so you know. They give the breakdown on the votes. There's 9 members of the Monetary Policy Committee. All 9 of them voted for the rate cut, right? And the consensus was that 8 of them would vote for it. Now they got 9. They don't tell you much about. Oh, here it is. Here's the asset purchase facility. So when this says 435 pounds, 435 billion, that's very deceptive. This 375 number is old. It goes back years. It's been years since the UK was involved with quantitative easing. So all this is done, all they've done is they've increased this number by 60 billion from 375 to 435, and you'll notice that's in red because the expectation, I believe, was that they would do more, and they only increased it by 60 billion. That's really not much. By the way, jobless claims are hitting as we speak. Jobless claims pretty much in line with estimates. 269,000 new unemployment claims. I don't see that as being a market mover one way or the other. Okay. Okay, so that pretty much covers the UK. We still have coming up in the US factory orders. That's an hour and a half away from now. And really nothing else of consequence unless you're trading Aussie. Tonight you get the monetary policy statement from the Reserve Bank of Australia. That could be a market mover. Factory orders in Germany are always interesting to watch because Germany is a huge exporter, and most of what they export comes out of a factory, right? BMWs and sophisticated medical equipment, German engineering. These come from factories, and so factory orders are very important for Germany. What else do we have coming up? Of course, tomorrow is the big day for non-farm. We touched on that briefly. Keep an eye on things like hours worked and average hourly earnings. You know, if you're bullish, you want to see these numbers rise. You want to see people working more hours, and you want to see them making more money per hour. All right, so those are two things to keep an eye on, in addition to the non-farm payroll number itself. And the unemployment rate is completely irrelevant, as we all should know by now. Ed, did you buy British pound this morning? Yes, I did, Joan. Yes, I did. I am long cable after the plunge. It's looking pretty good here. And I'm planning on hanging in there for a bit. I don't know. You know, I might trade it. I might hold it long term. I'm not committing to anything right now. I want to hold this long term. On the other hand, right now, if I dump it, I have a very nice trade. And so I just don't want to cut myself short. You know, I don't want to take 30 pips and then realize I should have taken 300. You know what I mean, Joan? I think we all know that feeling when you take a 30-pip profit and then you kick yourself because you should have gotten 300 out of it. I think this could go back to... You see, I have a line here at 133. 133 seems to be a reasonable target area. Maybe a little bit under. Look at this for a trade. Look at that. Left, head, right. That's an evil-looking head and shoulders pattern just prior to the result. But a rally back up to that neckline is 132.85. So, I mean, if we were to get to 132.85 pretty quickly, I might be willing to just take a profit and walk away with some money in my pocket. You know, there's nothing wrong with 150 pips on a short-term trade. But, you know, that's why. And Joan, I know you recall, you're asking, did I buy it? Because this is all I talked about earlier this week, about how this whole thing is overblown, and there's so much excitement surrounding it, and there's so much hype. And sometimes when there's a lot of hype, they get clouded. You know, and I was reciting earlier all the list of companies who are all saying that there was no significant impact from Brexit. Google, Credit Suisse, Citibank, Wells Fargo, SAP, that's just a short list. There's probably more, but a lot of companies are reporting no significant impact from Brexit. And the British government is saying, not the British government, the British Central Bank, the Bank of England, saying they're lowering growth projections for next year, but those growth projections still show positive growth, which means they do not believe they are going into a recession. And of course, they were doing a very hard sell earlier, telling everyone that we were going to go into a deep recession if the Brexit vote passes. George Osborne, the Chancellor of the Exchequer, said that GDP would fall by 3.6% and could fall by as much as 6%. Can you imagine? And now they're saying it's going to rise by 0.8. Not quite the same thing, right? Not quite the same thing at all. Okay. All right. So let's continue. Are you still on the Euro-USD trade? Carlos, no, I was saying earlier, man, I blew it. It was a good call, and there was no reason why it shouldn't have worked. But I was impatient, and I jumped in too soon. Right? I jumped in, like, 112 is right here. Now, I said let it come above 112 and then put the sell in. It got above 112 here. I got in too quick. It came back down. I got in short, and it comes up and hits my stop way too quickly. All right, I played it. I played it too fast, and then it does exactly what I thought it was going to do. It comes above. It goes to 112.30, and it gets below, and it's a screaming short here, and it does nothing but drop like a stone. It's a perfect call, but I just didn't execute it properly. Do I think above 113 is a good short? Let's take a look. Let's take a look at the chart. Yeah, I mean, I see huge resistance at 114. If it could get up to here somehow, I would be shorter than Tyrion Lannister up at 114. But what do you think, right? So a lot of resistance at 114. Right, that's looks like a great place to sell short. Looks like somebody smashed it down with a hammer there in early June and in late June. Got the GOT reference, right? Tyrion Lannister would have been a great. Don't you think he would be a great trader though? I think he would be he's definitely my favorite GOT character, and I think he would be an excellent trader because of the way his mind works. He seems like a trader to me. Anyway. Oh, yeah, right? Tell me about it. The dude is a born trader. Of course, you could say that about a lot of these. Like, Littlefinger is such a strategist, right? He's absolutely Machiavellian, though. When I see Littlefinger, I think of Machiavelli, right? And to a lesser degree, some of the other characters also possess those traits, but definitely Tyrion Lannister would be an awesome trader, and I would put him on a desk with Littlefinger. Those would be, I would trade with those guys, Littlefinger and Tyrion Lannister. Okay. Those guys. Dude, I want me, Tyrion Lannister, and Littlefinger on the same trading desk. Could you imagine? Anyway. That's going to just about wrap up our first little session today. We'll end that on a high note. So, very exciting. British pound dropping after the Bank of England, but already getting a little bit of a bounce. And much more to happen. Don't worry, Ed, your USD is rigged. Oh, my goodness. Yeah. What isn't rigged, anyway? You know? Well, I have a poll that says it's going to drop. So, all right, never mind. All right, I'm out of here. I'll see you guys in about 20 minutes or so, all right? Everyone have a great day. Good speaking with you.